Hello, everybody. Welcome. Happy Hump Day. It is Wednesday. Here at Ninjacators, we are incredibly excited to welcome you to another edition of Profits at Noon. We are going live 3 days a week, Monday, Wednesday, and Thursday at noon Eastern time with my co-host here today, Richard Krugel. Basically, what we are really excited to show you guys today in this new weekly branded event. This is 30 minutes that could make or save you 30 ticks. Okay, so you're going to receive our to the tick trade levels. You'll discover institutional market traps that we're monitoring, and you'll be able to steal our trade setups and the setups of our favorite partners in the future. So we'll show you all these levels we're stalking. We're going to steer you clear of those market traps. And in addition to all this live analysis, we're giving you actionable levels you can copy and trades you can stalk. So please stick around, stick with us. You'll see these trades in action. And as we progress through the week, we will also have updates on all of our positions. In addition to the live analysis, we're also throwing a few surprises and a couple of cool stuff in there for you guys. So today we're continuing our tool spotlight this week, which is on our Elliott Wave Pro tool suite. So you'll see Richard using that on his charts in just a second here as we dive into the levels. And then towards the end of today's session, we'll make a little room for Q&A. And we'll also take a closer look at the Elliott Wave Pro and a little surprise coupon code we have in store for you that we can't wait to share. So again, we are going live 3 days a week at noon Eastern time. Welcome to the Wednesday edition. And without further ado, I'm going to pass the reins over to our co-host, Richard Krugel, who's going to get us started with our levels to lock.
Thank you very much, Nathan. And hello, everyone, wherever you're on the world, or almost evening time here where I am. But always great being with you guys. I see we've got quite a few market participants logging in today, which is always great to see. But before I get going with the analysis part of things, just a quick reminder and disclaimer that all information in this video is provided for educational purposes only. It's not an offer or recommendation to trade futures, stocks, options, or Forex. All right, with that out of the way, if you're new to this live stream, I do tend to go over the indices. I like going over the ES, the NQ, the YM, the Russell, and then also look at the gold and crude oil market. And you'll see a lot of these lines on my chart. The sort of orange one you're seeing over here, it's a pivot point. I got R1 for resistance, R2 to upside. It's a normal run-of-the-mill pivot point indicator that you can get for free at on NinjaTrader, obviously. Then you also see, very importantly, these lines up here. It's also brown dashed lines called projected range highs and projected range lows. You also got deviations of those to the downside and to the upside. Now, these are proprietary, is a proprietary indicator from Ninjacators, and it's based on previous days' volatility. So these bands are set on the day when the actual trading day starts. And to a very high degree, price tends to gravitate towards them, as well as find support and resistance at these lines, whether it's on the downside or the upside. Now, what Nathan didn't mention is we're still working on releasing a worksheet, or the newsletter, as it might be called. We're still deciding what's going to be called, a worksheet or a newsletter. Now, it's going to be called the Levels to Lock. And these levels I will be releasing 15 minutes within the members area if you want to sign up to that, 15 minutes prior to market open. All right, you're either going to receive an email that the members area has been updated, or you can just log in and you'll get a login code and password, etc., to see that information. Because what's very important during morning my time, which is why we're doing these sessions, and obviously I'm sitting in Cape Town. Well, most of our US clients are sleeping. I can already see where these levels are. By the time you guys wake up, I've done my homework, got a bit of a directional bias for each market, where I think support resistance might step in. You know, what the direction of the market might be. Are we gonna experience any volatility during the course of the day, important news events to look out for, etc., and so forth. Just to sort of like a newspaper that you're ready to see what I'm looking at and what I'm expecting for the day for each market. So that's not 100% ready just yet. We're still fine-tuning a few things. There were a few bugs, but that'll all be sorted and ironed out pretty soon. So Again, if you don't know what all these lines mean, please tune in tomorrow again when we have another session, and soon you'll get a good hang of what I'm looking at here. Now, I'm really interested in the morning about formulating a plan for the day, and when I do have the afternoon session like you're viewing today, then we can see where prices in relation to these levels, have these levels been reached, and then see if my let's say sort of forecast is still on track for the remainder of the afternoon and so forth. So again, sorry, I just had to mention that so you understand what all these lines mean. They're called our levels to lock. All right, that being said, I'm on crude oil, should be on the ES here. We've had the CPI numbers that came out yesterday, apparently, well, not apparently, still slowing or showing that the inflation's cooling off a little bit. But yeah, according to the headlines, investors are still a little bit worried about the rate hikes in the future, and that the Fed will continue doing that for the forthcoming future, right? So they don't see any need yet to reduce the interest rate hikes thus far. So that created quite a little bit of volatility, up and down, up and down. This is looking at a 4-hour chart of the ES. And I was saying on Monday, when we had this week's first live session, that I'll be pretty much flat on most of the markets until that CPI data came out, because of this huge spikes that we've seen. I think if you look at a 60-minute chart on the ES and NASDAQ, YM, Russell, the markets we're following, I think even on crude and gold, we've had quite sort of a whippy market conditions there, quite a bit of volatility. So yeah, that being said, since Monday, the market's sort of been, or since, how can I say, since yesterday, been trading within the range of that candle over there. This is now obviously on the 4-hour chart, right? We can even go and do that. Where prices in relation to the pivot points, I would like to quite often see if price closes above or below a pivot point, if it would then, let's say in a bullish scenario, move then to R1. But for most of the day, it's been hanging around below the pivot points, even been acting as resistance just now. Just before we started today's session, it looked like we might see a move above there, but price is pulling back again. I think this might continue for potentially the remainder of this week. Very difficult to say where prices are going to be going, and this is obviously why I also look at price structure and as well as some Elliott wave analysis, which I'll mention in just a second. But in any case, we were looking at beginning of Feb at this move. I thought this was just a correction, a single zigzag, and price is going to go higher. When we've done a new section, a live session, we've had a 5-wave move to the downside. On that stage, I reckon that this was probably indicative of the start of a larger move to the downside. Now, a very strong move back to the upside. And then, yes, we did get that another probably 5 waves to the downside again, potentially ending a corrective move right within this zone over here. Now, all the way down, yeah, targets were reached at those projected ranges that I've shown you guys last week. But yeah, since then, we've had a strong wave back to the upside. Now, I'm still viewing this of what's happening here as corrective, i.e. meaning that within the zone here, last week, when was this, on the 10th, that this was potentially the end of a correction, and that we might be going higher, where this was the first start of a new move to the upside. And obviously, you have a lot of this volatility, very difficult to try to figure out from an Elliott wave perspective what's going on here. But potentially something like this going on. Might still see another pip of this low that formed yesterday. And that will potentially take price to support at 4,101. So it's really a matter of seeing if price can actually overcome that pivot level at 4,143 3/4, maybe today or maybe tomorrow. And then, you know, if price then heads back up, then that should bring in R1 in line towards 4,183 3/4, and the projected range high is just lying slightly above it, also around 4,184, I believe. But it's all about really seeing if price can break out of this sort of sideways ranging move. But that being said, a break below today's lowest low so far, which is about 4,130. Now I think we can see a flush towards at least S1. Like I said, 4,101, maybe giving us some sort of an ABC, and then we get that another strong move back to the upside. That is my expectation for the time being. So it's really a matter of just checking out these pivot levels. Where does price close according to, above or below directionally wise? And then we're also looking at price patterns and market structure and a little bit of Elliott wave analysis to figure out where price could move next. All right, so not really too much has changed since Monday's session from the analysis part of things, but you'll see here I've got my Elliott Wave Pro tool suite attached to a 60-minute chart of the ES. Now, as I go through the bit of the levels to lock, I'll then also switch back to the Elliott Wave Pro just to show you how the Elliott Wave Pro is actually labeling things here. Now, this is that move that I've told you about, which looked like a 5-wave move, and the Elliott Wave software actually counted that really well. Actually, I should have had this on the bearish count when price started moving lower. And it also labeled it automatically, guys. This all happens automatically as a 5-wave move. Then I think this was a A, this was a B, and then it started labeling another 5-wave move. All done automatically. Now, since we had this strong move back to the upside, I then switched to the bullish count, and it labeled this as a first wave, which I tend to agree with here. Even if you look at this first wave to the upside, does look like some sort of a 5-wave move into that high. Now, currently the software is labeling this as the A of a 2, a B, and that we might see another C wave to the downside and then another move to the upside. But this might all be over already. If it is some sort of a triangle maybe happening over here, then the software won't be able to label triangles for you, unfortunately. But it does give you these zones where you can expect support to step in according to what the Elliott wave count's telling you. So without talking too much about Elliott, I'll get to the Elliott Wave Pro properly in just a while. Basically, just from my overall view, I think that this was a wave higher and that this is some sort of a correction. It's either over. So keep an eye on the 4,143.75, close above that on the 4-hour, and we might see another move up, maybe confirming that that was indeed just the end of a corrective move versus this move to the upside. A close or a move below, without price obviously closing above the pivot point, but a close below today's low at 4,112, 4,113. And I think we then dealing with an incomplete correction that might be very near to ending potentially towards 4,101 before we see another move to the upside. Right, so I spent quite a bit of time here on the ES. Just wanted to do that so you can get a good hang of what I'm looking at and know exactly what I'm talking about when I mention these levels on the other markets. NQ, very similar thing. Also seen a potential A, a B, a C. Potential wave 1 up, potentially this is a bit more difficult, price structure a bit more different than on the ES, a potential A, maybe B, a C, and then higher. But where the ES is hovering below the pivot point, the NQ is above its pivot point already. So a little bit of strength at the moment, but also, like I said, I would like to see price break out of these little ranges has been in, basically the ranges of those candles that formed during the CPI event. So yeah, if we see, I think, a break above these highs, I think we can easily see 12,739, where R1 is potentially a move to the projected range high at 12,829.5. If that does happen, I think it will be so close to these highs anyway that was set in the beginning of this month that we're probably going to see a continuation to the upside. Also, just a little bit wary that whether this was the end of a correction or if it's still correcting. But I'm expecting overall that whether it's ended now or later, that it is just in a correction and that we might be heading upwards again. Again, guys, sometimes you're wrong, obviously. In trading, you can be wrong quite a few times. But that's my expectation, my game plan. So if price would, for example, move much lower than these lows, for example, on the NQ and racing on the ES, then I'll have to question the analysis. And I did mention this on Monday that, if we've seen something like this and we expect now this correction of another move higher, but price instead starts doing this, then for me, that's going to mean we're busy with a double zigzag, basically ABCX and ABC, which might then still be a correction, still scare everyone a little bit, and then see a reversal up to the upside at a later stage. So I quite often look at my corrective patterns during corrections. First off, the first one I always think about is a single zigzag. And then if that changes into or morphs into something else, then my immediate next go-to corrective pattern is a double zigzag. Triangle's a bit more easier to spot because they're moving sideways in a contracting range. I'm not seeing that just yet. It might be that we're busy with triangle, but I'm don't really want to entertain that idea just yet. It's just because it will be too early in its development to say that for sure. Well, not 100% for sure, but to, get a confident sort of idea that it is a triangle we're dealing with. On the NQ, I'm not going to show you because I'm just trying to save a bit of time here. The Elite Wave Pro on the NQ, because it looks almost exactly as the ES. So let's look at the YM just now. YM, extremely messy in market. I've not been trading for quite some time. Actually, I haven't touched the YM this year. Also had a nice run up, obviously, like the indices has. But sort of, yes, since the end of Jan, the price has been ranging. Very messy sort of range. Up and down, up and down, up and down, up and down. And I was saying that we'll need to see a close above these previous highs for me to think that whatever is happening here has ended. Because price was heading up higher, and I only loaded a few days worth of data here. Let me do this. It was sort of heading higher into these areas and now doing this. It does look like it's sort of a topping formation, but very difficult to say. I mean, when things are this messy, always look to the left of your chart. And if you see a lot of mess, then for me, at least, I like to stay out of this market. But let's just look at today's levels to lock. Pivot point at 34,166. Price has not reached S1 yet at 33,782. It might do that. Price has moved to that upper limit again, where it's sort of found resistance on many occasions priorly. Maybe we'll see another move down. So also keep an eye on today's low. That's thus far been at, let me just get that exactly, 33,871. I think we get a break below there. We're probably going to see a move back to the bottom of this range. Potentially with price hitting S1 at 33,782, and these projected range low for the YM is currently lying at 33,590. All right, like I said, a very messy price action. YM, I'm not even going to look at the Elliott wave analysis side of things just because it's the labeling's all over the place, and good luck trying to make sense of what's going on right here. Okay, that brings us to the Russell. Same thing. I think we've potentially done with an ABC. Potential first wave up to the upside. That looks like a beautiful 1, 2, 3, 4, 5. Now, this is either still correcting like on the ES and on the NQ, or corrections already ended. We'll have to recap and see if we get any better sort of, I'm going to say, idea of where things might be heading to by tomorrow's session. Maybe if price breaks back up, I'll have with a bit more confidence say that that was the end of a correction. So this does still look like a 5-wave move to the upside. Potentially we had an ABC, but it hasn't broken these lows just yet. Price currently pushing above that pivot point, 1,942.6. I think we get a close above here and a break again, at least above the current 4-hour candles high, depending on the way it obviously closes. So we could see a move to 1,964, where we have R1, and I can't really see the projected range high. It's labeled behind there. 1,964 spot 5. So it certainly looks to me that a correction potentially has ended. But even if we do see another move lower, it might just be a C wave of a counter correction versus this first move to the upside with a continuation upwards. I think on the Russell, a break above these previous highs here, and we're probably, or hopefully, going to see a new bullish move back upwards, potentially test these highs we'll set in the beginning of February. All right, that brings me to gold. Now, we were looking at this consolidation phase that started from around about 3rd and it ended on the 9th. Now, during the previous live sessions, I was saying that I was also on the sidelines a bit with gold. I wanted to see price break out between these two clearly defined upper and lower limits of the sidewave move. And you can still see I've got a channel here that moved to the upside at that stage. I think we were dealing with a double zigzag ABCX, ABC price came very close to hitting that top channel, typically how corrective waves behave. And we've seen a break below this channel as well as below this lower sort of area where this range started from. And at that stage, I was still pretty bearish. I still am bearish gold. I also mentioned on Monday that we potentially, my target was actually around about 1845, I think it was, of where I think support might step in. That is at today's current projected range low, already surpassed that at, yeah, around 1845.5. So I'm expecting support to step in here sometime soon. Don't think this move in gold in the bigger picture is actually done yet. This was that actual high for the year in gold. It was like 1,975, and this is obviously for the April contract. It's difficult for me to say that this was some sort of an A, a B, and a C currently. I think this is still, or might be, the first wave lower of a correction, potentially going to see a bounce sometime, and then another move to the downside. Without trying to get too far ahead of myself, like I said, I think support's going to be stepping in. Price that reached that sort of targets I had on a bigger time frame. Price already reached these projected range lows, which is a bit of a bummer. This is exactly why I want that worksheet to go out, because by the time you get that worksheet in the morning, you know, and if there wasn't a big move already, then, you know, you got clear targets to aim for. Now, I think most of this move has already happened for today. And now with the afternoon session starting, we might still see maybe a bit more weakness, maybe a bit of bounce, but I'm not expecting any more fireworks in gold at the moment. If we look at the Elite Wave Pro, now it's labeled gold on the bearish side of things here. It's actually labeled as a wave 1. And this is on a 60-minute, meaning it's looking at that wave 1 as a 1, a 2, a 3, a 4, a 5. Now, this is that double zigzag I talked about. It labeled it almost exactly as a double zigzag, which is pretty amazing in my opinion. And then that this now is the start of, I don't know, a third wave, that being the first wave of third wave, second wave of third wave. Although this is a bit short as the third wave of third wave, meaning it expects another doing this and another move down to complete the third wave and then up again and then down. So that being said, the Elite Wave Pro labeling, depending on what time frame you're looking at, you got to kind of decide where it is actually labeling it according to some of the guidelines that you potentially know about, or hopefully know about if you do follow Elite Wave analysis. But, you know, the way I use it, I just kind of have it as affirmation as to, you know, is it labeling similar to what I'm expecting? And if it does, then, you know, I like to take trades according to where these zones are printed. Again, I'll go over what these zones and stuff mean in just a sec. But what I'm trying to say here is that I'm thinking this is sort of starting to get exhausted to the downside. I'm expecting a bounce to the upside pretty soon. All right, last one, crude oil. I think this was also beginning of February, around the 5th. I think it was a Monday or something that I mentioned crude oil also running out of steam, and we could potentially see a reversal to the upside. Now that did happen. It was a bit stronger than I thought it was going to be, but in any case, in the bigger picture, which you're not seeing right now, crude oil has been coming down pretty hard. I'm seeing this as a potential first wave to the upside. Now this is corrective, and another wave to the upside like that, and then potentially later another decline. All right. The reason why I'm also saying this is that I think this does look like an impulsive wave to the upside, potentially it being an A, a B, and a C still to form, or some other more complex correction. Again, a lot of the moves happened during the overnight session for you guys, the Globex session. Price already hit the S1 support, which was at 77.69, and I think the crude oil inventories came out what about an hour or so ago, showing that there was a loads more supply than that was anticipated. So this could potentially mean more weakness for crude. I don't think that this move to the downside is just done yet. So if we do get a close below S1 today, maybe during the afternoon session, I think crude was probably the candidate I would like to see if I can short this towards the lower S2 at 76.49, or the projected range low, which lies slightly below S2 at 76.46. So like I said, don't think this move to the downside is done just yet, just from a FIB retracement perspective. Price just reached the 38.2. Now, why I'm using this high and not that high is because if I look at the Elliott Wave Pro, now kind of agree with this labeling here, switching back to the bullish count, is that wave 3 actually ended here and not this recent high here. And one of the reasons I'm thinking this is all of correct is because when price moved lower here, it did in 3 waves. It also made a new high in 3 waves. And when you see that, because you would expect, let's say in a bullish trend, price to make 5 moves to the upside. Now, if it makes 3 moves and starts declining, that's very indicative in my mind of that we're going to see a 5-wave decline to the downside, meaning that this entire correction, so you had a high, which is this one over here, you had a decline. You know, another high that just popped that high, sometimes it's in line with it. This being an A, that actually being a B instead of a motive wave, and then 5-wave to the downside. And this whole thing is called an expanded flat, where your A wave travels in 3 waves, 1, 2, 3. Your B wave travels in 3 waves, 1, 2, 3. And then you get this 5-wave decline for a C wave that actually happens in 5 waves instead of another 3. And I think price could potentially still move as low as these previous lows over here, around 76.61. If you have to look at the projected range lows, when did I say that's going to be potentially at 76.65? You got S2 at 76.49, a projected range low there. So I'm saying if price just bounced now from a 38.2 retracement level, because if you're going to measure this or think this is a correction, you got to use your FIB retracement level from the point where this started to the end of where that wave ended. In this case, I'm thinking it's this one, not this one. Beautiful touch of the 38.2. So if we see a break and a close below that level, 77.24, then I think there's a good chance we're going to see a test of these lows, which will also bring in range those projected range lows and that S2 that I just mentioned. All right, guys, so that pretty much concludes the analysis side of things. Again, sorry, the worksheet is really going to work well with what we're trying to do here at the moment. with the profits at noon. It's just because you're going to have these levels way early during the day, and I formulate my strategy according to where price is going to move, price structure wise, Fibonacci, Elliott wave analysis, etc., so that you know what to expect if price breaches certain levels and the directions and stuff that I'm looking at. To a very high degree, these levels do get reached, so that's why it's such a benefit to actually have this during, the morning when you actually wake up. So do keep an eye on for more news on that newsletter. We'll obviously during one of these sessions let you know how far that is. We're probably going to have to check up with those guys working on that potentially later today, and then hopefully we'll have an answer by, let's say, tomorrow or Monday, or maybe a little bit later, as to when that worksheet will be ready, or that newsletter. All right. So let me just quickly discuss the Elliott Wave Pro. You've seen me use it. You've seen how it's been labeling. Now you might probably want to know what these buttons mean on the top here. This is the actual tool that we call the Elliott Wave Pro. And we also have these zones that's printed. We have zones in green, and we have zones in red. Now, very simply put, when the Elliott Wave Pro thinks it's dealing with a bullish scenario, you can actually go and change these buttons. You see I've got on the top there. If they're both on green, that one being bullish, and this arrow is showing down for bearish, it will label both bullish and bearish labels. Obviously, if you start seeing a market moving upwards, making higher highs, higher lows, I will go and cancel the bearish labeling, and it would automatically start looking at labeling these waves for you. In this case, motor waves to the upside. In this case, it did 1, 2, 3. Now, this was a beautiful scenario where it also gave some sort of indication that an expanded flat might end within a zone. And this zone you see over here, that red zone here, it is automatically also put on the chart. Then the software expects that if you do get a decline, that it will potentially end within that area. And this is before price actually gets to that. So this is a very good example of how price perfectly touched the upper limit of that zone, and then we've seen another move to the upside. Now, these zones to the upside is where you expect, let's say, a third wave would generally move towards, and they normally extend towards Fibonacci extension ratios, if you're familiar with Elliott wave analysis. Now, if I go into the settings, which is a little tab over here, there's quite a few things that you can change around here. We've got swing strength. We got it goes from very small to very big. I've set it to big on a 60-minute time frame. If you're trading on a smaller time frame, let's say a 5-minute chart, there might be a lot of noise on a chart from an Elliott wave perspective. So you might want to choose a little bit of a bigger swing setting rather than small ones, meaning that it won't label that often and make your chart too cluttered. But anyway, there are manuals and exactly how all of this works. I'm just trying to show you guys today what all these settings mean and the functionality. So these lines you're seeing over here, you can change those colors, the ones that are, moving up and down between the highs and the lows, the end and the start of these waves. Now, very importantly, for every single wave that you get, you can also go and manually change these ratios here. So, for example, let's say in a bullish scenario that you activated the bullish side, the software created the wave 1. Now, once price starts declining, it looks at certain parameters where it will then automatically throw that zone. In this case, you see the zone over here. It will populate between 50% and 61.8%, which are Fib retracement ratios. Again, you can go change this to the upper limit being 61.8, maybe the lower limit being 78.6, whatever the case might be. But I kind of just like leaving it at the default settings. And again, we also have an invalidation level, because if you have a wave 1, then your wave 2 shouldn't reach the start of the proposed start of your wave 1, right? If that does happen, something else is going on, and the Elliott Wave Pro tool will automatically start reconfiguring and thinking, something else is going on, and label it in a different way. Wave 3s, these big zones on the top here, after a wave 2, you can expect a wave 3 to travel a fib extension of wave 1, right? to the upside, a minimum being 112.8 or 161.8 or 200. 200 not actually being a Fibonacci ratio, but you know, we do use 200 because those are basically double ups of ranges, etc., in the world of Elliott wave analysis. Again, fully customizable. When you see a very strong moving market, for example, you may decide to move these zones higher. Again, I'm just using the basic default settings. Wave fours, similar thing when you're dealing with the wave four. Yeah, we had a good example. It thought it had a wave four, had this area price pulled back into and moved higher again. So again, these zones can also be adjusted exactly according to what you think it might have to do, or if you've got a different idea about Elliott wave analysis, then so be it. But very importantly, wave four shouldn't really come into the area of wave ones, and that will also why it gives you these invalidation levels. Price to reach those levels, it invalidates the count automatically, and the software will then start recalculating things and labeling it in a different way. All right, and then yeah, like I said, you have to this doesn't happen automatically. You have to decide if you're dealing with a bull market, activate the bullish side. I think you're dealing with a bear market, let's say a correction within a bear market, you might decide to take the bullish count off and label the bearish count. Or if you think a new trend to the downside started, activate the bearish count. Right, and that's pretty much it what the Elliott wave tool does. A really cool tool. I use it quite often. Actually done a video series a little while ago, trading live with the Elliott Wave Pro software. Primarily looking for the end of wave two, so I can get into the impulse waves, trading third waves. And also, I think I took 2 trades at the end of wave fours, and very uncanny how price actually pulls back into these expected retracement zones. I like to look for the end of corrections. Get into a trade, I look for other conditions as well, reversal candlestick patterns, etc., etc. Jump into a trade with clear targets. But, you know, when you're actually looking at a few markets during the day, for me, at least, the Elliott Wave Pro does a really good job at doing all the heavy lifting for me from an Elliott Wave labeling perspective. So I don't really have to go and label all the things all the time. Now, if you use smaller time frames, I'm not that a big fan of going anything smaller than, depending if I'm scalping. But with Elliott wave analysis, I don't really like going smaller than, let's say, a 60-minute chart. But if it is possible to use the software on much smaller time frames. But if you're using smaller time frames, then you keep up with that price movement, it can become very tedious. So obviously, again, this is where the Elliott Wave Pro software comes in handy to make your life a little bit easier and do most of the labeling for you. Right, and that pretty much concludes my analysis for today, guys. Nathan, you've probably got something to say there.
Sure. Yeah. I actually just in the chat, we had one question to take a look at very quickly too. But I just want to let everyone know, I just shared a link in the chat as well as a coupon code that you can take with you over to the website, and it'll knock 20% off of the Elliott Wave Pro instantly. So if this is something you guys are interested in, we've put together this special coupon code just for these sessions here. It's only for the guys joining us for Profits at Noon. And the coupon code won't be around forever, but we did just want to throw something special in the mix. And we do plan to have cool surprises for you guys like that moving forward. So again, we really encourage you to use that coupon code. I'll take over the screen share just really quickly, if that's okay with you, Richard. And I'll just show you this coupon code in action really quickly. So if you're seeing this screen here, it's the Elliott Wave Pro and the Ninjacators storefront. So basically you could just follow that link, and if you throw it in the cart, all you've got to do is just pop in there, paste your coupon code, and you can see about 180 bucks comes off the total instantly. And again, this coupon code is not circulating anywhere else. It's just for these sessions for you guys and gals. So really encourage you to use this. It won't be around forever. But before we go ahead and wrap up today, Richard, I don't know if you saw Matthew had a question while we were taking a look at crude oil. Maybe you could give us a little additional insight on what the hell happened there.
Yeah. And I mean, it almost perfectly touched the pivot point back to the upside. Down again, As I was talking about the 38.2 retracement, what's it at 77.24? Yeah, go look at those crude oil inventories. The amount of supply is insane. I think they expected something I can't remember. It's millions and millions more than they expected or forecasted, you know. So a lot of supply, obviously at these lows. Like I said, I don't think crude oil is done going lower, but don't really know. I mean, that crude oil inventory report came out quite a while ago. So yeah, we'll keep an eye on it and see what happens by tomorrow.
Sure. Yeah. And remember, guys and gals, we are going live 3 days a week. Our next session is tomorrow before we'll wrap up the whole week. So we encourage you to come back, join us again tomorrow, same time, noon Eastern. I'll be here. My name is Nate. I'm probably a new face to some of you guys. Some of you guys probably already familiar with Richard just through Morning Bell and a few other things he's been working on with us. But yes, we will be back tomorrow at noon. Encourage you to come and get those updates. And as Richard mentioned, the levels to lock and how that relates to the newsletter. That is something we are working to get to you guys as soon as possible. It will be available for a very small fee. It's not going to be anything exorbitant, but basically it will give you access to all of those levels, everything we're watching outside of these sessions, so that you're always kind of plugged in. You'll always know what Richard's thinking. You're not really on your own. And then another added benefit, of course, is Richard is located in Cape Town. So he's quite a few hours ahead of most of us here in the United States, depending where you might be elsewhere in the world. But typically what that means for me, even in the Eastern time zone, is he has these things updated by 4 or 5 a.m. my time. And thankfully, I'm not up that early. But by the time I do get up, all that information is there. It's ready and it's waiting for me. And then, of course, you will have the opportunity to join us on these live sessions, see how it plays out, and follow in real time. So we want to thank everybody for joining us here today. Thank you for your time. I want to thank you, Richard, for sharing the analysis with us. Nathan. Remarkable as always. And then, of course, for sharing the Elliott Wave Pro. Again, we know we've spoken to a lot of traders. Elliott Wave theory is a very common pain point. If you've ever been frustrated or reached a point with Elliott Wave counts where you're fuming, you want to punch your computer monitor, you're not alone. We've heard from a lot of those folks. So everything in this Elliott Wave Pro package is geared towards being a quick start. So we have a lot of resources packed in there, including a few chart templates, our quick start guides, videos, PDFs, and then of course, Ninjacator support always available to you guys. So if you ever have any questions, any concerns, please feel free. You can see right here at the top of this screen, this phone number is plastered all over the website. It's the fastest way to get in touch with us. You can also contact us via email. So do encourage you to go ahead and use this code today. Spotlight 20 will save you 20% on Elliott Wave Pro, or the equivalent of about $180. So encourage you guys to use that. We'll be back again tomorrow. And thank you everyone for joining us again. We'll go ahead and wrap today's session, but we will be back soon, and we'll hope to see you guys tomorrow.
Yeah, thank you everyone. Thanks for tuning in. As always, have a fantastic rest of your day, and I'll check you out tomorrow. Goodbye.
All right, everybody. Happy and safe trading.
Cheers. Bye-bye.